Hey everyone, me Kevin here. Welcome back to another market closing live stream. Boy, oh boy, the market is being quite interesting right now. is a nice way to put it. This morning, it really seemed like we weren't really having any kind of inflation reaction, and it kind of just seems like throughout the rest of the day, we started having a little bit more of a, oh wait, yeah, maybe it is abnormal that in July, as inflation is expected to kind of at least start rotating down a little bit. It's not. So yeah, this is an interesting one. So let's go ahead and pull up, see what's going on in the sticks. We'll get the terminal up. We'll see what the heck is going on in the world right now, because it seems a little nuts. So okay. All right, let's get in over here. Alrighty, so we've got towards the red side. Let's go ahead and sort this way. There we go. Newegg down 15% at the moment. So momentum selling off is continuing. We have Ashford Hospitality, also momentum down 11%. Affirm, oh my gosh. Affirm all of a sudden down 10.51%. This looked like a very sudden occurrence here as well. Yeah, look at this sudden sharp sell-off over here. We went from volume to, from no volume to all of a sudden volume. This is on the 1 minute chart here. We sat at, somewhere around 700 to 4,000 shares of volume. And that all of a sudden exploded to 300,000 shares of volume. Massive, massive volume here. Very, very interesting. It does make me wonder what's going on with the firm. We do also have earnings today that we're going to be covering. I'm going to pull up the Bloomberg terminal quickly here so we can see exactly what's going on. But it's been a little bit of an intense day, heavily because of... here we go. Apple and Goldman plan buy now, pay later service to rival Affirm. Oh, well, there you go. Take a look at this. Here's your news. Apple, Goldman plan buy now, pay later service to rival Affirm. Very, very, very smart. I mean, if you think about it, Apple, the Apple Card and Apple Pay, why not just do exactly what PayPal's doing? If PayPal can do buy now, pay later, which people have actually been using on the courses I have linked down below. That is. I mean, it's like, it beats me having to administer. I mean, just trying to think about this. I'm not trying to really pitch it. I'm trying to think about this as an investor. Like if somebody, as a business owner, wants to take installment payments for something, then you have to do the follow-up. Make sure people follow through and pay. If they don't, how do you deal with it? And you have this whole like customer service thing that comes in. And so, for example, we just haven't done pay over time. It doesn't make sense. It's too complicated to administer. But if you get PayPal that comes in and says, hey, well, we'll extend the credit to you, buy now, pay it over time. Well, now the merchant gets the money right away. And PayPal deals with all the customer service stuff. Apple doing this is actually really brilliant. Affirm has been a big part of Peloton's sales, supposedly. They've been a pretty good partner, but we always know there are other payment options that come up. But they've been a pretty big payment partner here. A lot of people, in fact, will go take a look at, oh my gosh, there's so many pop-ups here. A lot of folks will go to Peloton, look for a bike. Oh, that's interesting. The bikes are not delivering in under 2 weeks. But anyway, take a look at this. So you could buy this bike package for whatever, $2,000 or $1,800 over here or whatever, includes delivery and assembly, blah, 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 blah. Pre-qualify now. Oh, what? It's only $49 a month? Oh, look at this. Make easy monthly payments over 12, 24, 39 months. Well, I want my payment to be as low as possible, of course. And hey, why don't I just go for the option? Oh, yeah, 39 months. Oh, look, it's only $48 a month. You know what? Since it's so cheap in that case, why don't we just hop on over here? Get out of this. Let's go pre-qualify for the most expensive one. This one's only $12 more a month. Let's just get that one. Yeah, so anyway, this is obviously how easy it is to take on debt these days. But anyway, rates are 0% APR, guaranteed or subject to credit check and approval, which is probably when you would get different terms if your credit wasn't pristine. And usually you end up paying some form of a financing fee. It'd be kind of interesting to see that. I'm going to pull that really quick. Let's see, 60.13. Although wouldn't that then be, yeah, because that would be in an APY. They're telling you APR here. 23.40. No, that's pretty much on dot. That's interesting. I do wonder you know, it's probably what probably happens is if you're late, that's probably when they stick it to you. That's interesting though. I mean, that makes it seem very juicy, right? Because it's like, wait a minute, it's the same price if I take monthly payments or not. It's actually pretty smart. Anyway, so very interesting that Apple is launching something like this to compete. Apple's working on a new service that will let consumers pay for Apple Pay purchase in installments over time, rivaling Affirm and PayPal. Yep, exactly. Yeah, we were talking about PayPal as well. Very cool. Apple Pay Later. That's a good name too. Yeah. Apple Pay Later will also exclude late fees and processing fees, only costing users interest for longer term plans. Oh, interesting. Yeah, maybe they only charge you now if you end up having the debt longer than you expected. But anyway, yeah, that led to some massive volume for a firm over here. So that makes sense. Down 11%. Yikes. ChargePoint just getting destroyed right now. Oh my gosh. ChargePoint's getting wrecked. Look at this. Big digital assets under $1 now. Hut 8 mining's getting wrecked, down 9%. Although at 440, you know, I think Hut 8's still doing pretty well. I still don't have any Hut 8. But look at this AMC deflating here with the momentum movement, unfortunately. We did buy a tiny little bit of shares this morning. And I always like to preface that's to be part of our momentum movement. I'm a big fan of the movement. But I think those of us who are in know that fundamentally the valuation's on the high side. But we're in it for the squeeze and for the momentum partnership. But I will say that short interest data getting jacked down today from like 19% to 15%. Like, this is why we need more transparent data in these markets. It's unreal. It's unfair. It's unfair to the retail investor. It's another reason. Like, I get asked at my rallies, my campaign rallies, hey, like, tell us more about this California Stock Exchange. And we touched on that a little bit this morning, but really, the California Stock Exchange. Hey, if you have a California Stock Exchange, you make it 100% transparent where retail investors and hedge funds get the same pricing, and you have the same information available. Well, now you actually have a fair stock exchange. That's what we need. It's a new stock exchange to give the NYSE and the NASDAQ a run for their money. You could come ring my bell. Don't clip that. Anyway, 264 on Lemonade. That's a burn on Lemonade. Obviously, Lemonade a little bit on the higher valuation side. It's funny, we were talking about even selling puts on Redfin this morning. Didn't do it, but we're talking about it a little bit this morning. Shift down 4.24%. Cardano kept falling. Bought this morning. I think it was like 127.5 or something like that. It's now at 125.3. Oh my gosh. Oh gosh. It's so depressing. It's tiring. Jeez. Everything's just getting whacked here. Look at this. Fisker, C3AI, Nordstrom, Boeing, like nothing is safe. Just everything. Sell today. Etsy down 2.8. Oh my gosh. Tesla's down 2.44. Sitting at 669 again. It's just, you can't get a break in this market. Now, Didi is coming back, and OGI and Build-A-Bear are coming back after their sell-offs yesterday. Tattooed Chef sitting at 271. At least it's not red like it usually is. Ubiquity sitting at 304. Shopify 1519. Meta Materials actually green 1.78. Nice. Matterport 0.62. Then we got mostly things here in the middle. Not a lot of green. I mean, this is what, 2 pages of green, and the rest is just pain. Crazy. That's a pretty intense day. Bummer for a firm. I like their concept and their the way they do it. But anyway, all right. Let's I'll pull up the Bloomberg terminal. Let's get some top news here. Let's also see what we've got on some of the stations. Let's see. Okay, we're looking at sports over here. Okay, how about Bloomberg Live? And don't get me wrong, I like sports, but like at 7 p.m. when you're hanging out with friends and family. We got sticks to worry about. All right, so CNBC's on commercial. They're talking about sports. Bloomberg over here is on commercial as well. They're just leaving us hanging. They're just, how rude. How rude. I'm sure they'll all be back at exactly the same time too. All right, let's go on over here. Let's see what we got here. All right, so we have let's see. Oh, I don't know why this switched. Oh, there we go. I think I accidentally hit that. There we go. That's better. All right. So we've got a $20 donation. What's up with Peter being a Debbie Downer and acting like it's the end of America? I don't know if it's being a Debbie Downer. I think it's just providing his rationale on the position the market may be in. And there are some things where you look at it's like, yeah, it certainly does seem weird that it feels like we've just been kicking the can down the road of funny money being printed, right? But this time is different. Or is it? I don't know. All right, let's listen in.
Steam out of most of those cyclical areas. Even though yields are up, they're up mostly after this auction. The immediate reflex reaction to the data were, okay, maybe it pulls forward some of the Fed tightening moves. That's not usually good for cyclicals. But I also have to take it in the context of we're up 10 out of 12 days. Market just doubled in 16 months. And almost any excuse to back off. But it is weaker under the surface than the indexes suggest.
Joe, do you think this alters Fed expectations for when they're going to tighten, or still this isn't enough to alter what has been a fairly resolute message from them for the last few months?
No, I think the Federal Reserve is observing what is now a U-shaped recovery in the labor market. So they're going to try and ensure that we gather some momentum like we had from May of 2020 through the end of August in 2020 when we recovered a significant amount of jobs. Well, if that's slowed dramatically. So I think the fiscal component of this is very critical to the Federal Reserve. And that's why I expect...
I'm going to pull down off this really quick. Yeah, I see one of you just commented this. Thank you for this. JP Morgan warns hedge funds to expect intraday margin calls. Intraday. U.S. Bank may demand variation margin up to 7 times a day. Oh, after the Archegos default? Wow. Wow. Oh, that's intense. That's a nice short article, though. I mean, I would like some more details, but all right, that's interesting. Let's see what Bloomberg's saying.
Oriented, especially in a stock picking kind of market. What a lot of people don't realize is when we talk about growth now outperforming value.
Was CPI that bad? It was very much higher than expected. It doesn't change my September, October outlook, but let me just put it this way. Okay, and this is just me, okay? This is just meet Kevin here, okay? If right now we were in October and we were looking at the September data and the September data came in like it did today, I'd be like, oh dear. I would not be very happy either. It would be very bad. So, my thesis hinges on that September data and that October data, which who knows if August is going to start letting us price that in September, or if we're going to have to wait for those earnings and CPI coming out in October. But within that 60-day period, that's a big moment for me. Probably October. I hate to say that because I want answers sooner than later, but all right.
Sentiment, because we've been grinding ever higher, but we've been grinding higher on pretty little breadth, really. And today has been supported because it's been some of the big...
Right? Imagine getting margin called multiple times a day. Yeah, not only margin called, but then margin liquidated multiple times a day.
One another, because sentiment has been stretched across most metrics for quite some time now, but overly optimistic sentiment, whether measured via behavioral measures or attitudinal measures, is never a perfect timing indicator.
Attitudinal.
Market breadth is very strong. That tends to be an offset to stretch sentiment. But we have seen some underlying deterioration in breadth. Yes, the S&P is still, at least as of yesterday's close, more than 90% of stocks are trading above the 200-day moving average, but it's quite a bit lower than that relative to the 50. And then in the case of the NASDAQ, quite a bit lower than that, both relative to the 50 and the 200-day. So you definitely want to keep an eye on breadth. We saw a little bit of a pickup and improvement in the latter part of last week, but a bit of a deterioration again. And you want to see whether the underlying health of the market is enough to offset what continue to be ongoing sentiment concerns.
All right, we're speaking here with Liz Ann Saunders, Chief Investment Strategist over at Charles Schwab. She is here helping count us down to the closing bell, but we want to jump over to Taylor, who's at the wall. Taylor.
No, Romaine, let's quickly look at shares
at the wall. That's not the wall I was expecting.
So on the day, this was after news this morning that they're cutting the forecast for how many 787 Dreamliners they can deliver now, but half of the 100 that they have roaming around in some of their factories. So certainly investors not liking that news today. Shares are off about 4%. Liz,
all right. Sorry, Taylor. We're going to go to CNBC for, well, yeah.
Pretty hard.
Yes.
It's something which on the other side is an added innovation, and it's an added offering from the Apple and Goldman Sachs partnership, but it's not going to make or break the offering for them, but it shows the damage can do when these other things are so richly valued.
It's just a feature, for those bigger companies. And also keep in mind, Apple now sells so many of its own products on an installment plan, on a zero interest installment plan. It's obviously is for all products, not just Apple. But there's a kind of a muscle memory in how they can underwrite these things and how they can price them. So I don't think it's very difficult to see why it would be a little bit of a threat.
Joe, what do you make of this? And just the general price action from the banks today, despite really good results, the group is down 1%.
Yeah, that's what's so weird is everything's in pain.
Have been long-term holdings of mine. And I think they're both in the investment banking and asset management side, having the type of momentum that others only wish they could. We know that trading, Sarah, is not going.
Goldman went negative. They were up 1.5%. No way. Their earnings smashed.
But Morgan Stanley and Goldman Sachs have done enough to diversify their business model where they're able to incur a form of a trading revenue slowdown. And that's uniquely different to what those two franchises were pricing off of in prior years. So I think they are my two favorite financial service names.
Oh, yeah. If the velocity of money goes up, we're all screwed. Yeah, it's that simple. Like you change that velocity of money calculation, we're all screwed. Like you don't see the what's it called? High savings rate, the high frugality, the frugal decade. Yeah, it's a problem. The amount of money that's circulating, you jack that velocity of money back up to what it used to be, forget about it. That's big inflation. Yeah. So you are with inflation, you are kind of fingers crossed on that velocity staying low. So I will say it is a little interesting how long it took the 10-year to react, and I was wrong. Okay, this morning during the when we covered the CPI release live at like 5:30 a.m. That's why I'm so tired. No excuses though. Got to keep working. Somebody asked me like, "Hey, isn't it going to react? What if it reacts more slowly?" And I'm like, "No, it usually doesn't do that. It should react. The 10-year bonds and stuff should react over time. I'm sorry, it should react pretty instantly." Was what I said, and so that was my thought. I would have thought the market would have reacted very, very quickly, but I was actually wrong. I was wrong. I will show you. Okay, this is from Bloomberg's terminal, so thank you very much from Bloomberg. But take a look at this. Right here, this first spike is when CPI data came out. Then it fell. Then it went back up. Then it fell. And then look. It like exploded. Now, don't get me wrong. Like if you zoom out to the 1 month, this is actually still very low. But that's a solid explosion there all of a sudden that happened towards the end of the day. Okay, we do have the closing bell to look forward to. And, oh dear. Affirm down 10.5. Newegg down 16. Hut 8 Mining, 8.7. Everything's kind of falling into the close here. AMC is falling into the close, 7.51. Redfin down 5%. This is just, ugly. DD's still up, though.
Sectors, industrials, financials, materials. Of the big six banks, only one is higher. Morgan Stanley, they report earnings in 2 days' time. Wells Fargo at the bottom of the pile, hasn't reported earnings yet, but down in light of JP Morgan's numbers, Goldman and JP Morgan. Yeah, well,
as usual, you can't hear a word they're saying. So Dow is down 0.3, S&P down 0.35, NASDAQ down 0.38. Russell down 1.88. It is a red day. We got earnings coming up.
Welcome back to Closing Bell. I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street. There's the Dow. It closed down about 1/3 of 1%. After earlier, you can see that little spike up positive.
Actually, the only company reporting today is Washington Federal. So we don't actually really have earnings. Until tomorrow. Wells Fargo's tomorrow. Oh, I screwed that up. We don't really have earnings to cover today. It's just market close and everything's red. So Wells Fargo, Bank of America, Citi, Delta Airlines, BlackRock, Infosystems, and PNC Bank. These are big ones. All tomorrow. Today's Tuesday. My bad. So let's just look at the damages. Oh my goodness. I do also want to see what the heck is happening here in the crypto market. And also, oh yeah. Yeah, see, I mean, to me, it's pretty clear. We had yeah, look at this drop. You can't say that crypto didn't fall because of inflation. I mean, I suppose, or because of CPI. I mean, I suppose if you zoomed out all the way like this, you know, you went to the day chart. Well, the day chart's not going to show it anyway. I have to go to the hour chart. I don't know. Honestly, even on the hour chart, like that's a big down arrow right here because of CPI. This is a big down arrow here as treasury yields started going up. It's crazy. All right. So yeah, that's a solid break of support right here on a BTC. Now down at 32.2. Yeah. Ugh. And I said this. I did a video about crypto too. Like not at all by any means do I ever want to come across as like, oh, like I'll tell you when I'm right. I'll tell you when I'm wrong. But if you go meet Kevin Crypto, right here, we talked about this. Mark this date. Well, the catalyst for crypto. No, there was another crypto video that we did like a few days ago. I can't find where it was. Anyway, I know we did a crypto video, but the point is we did a crypto video and I thought it was yesterday. Wasn't it yesterday? I don't know. I swear it was. I don't know why I can't find it. But anyway, we'll do some Q&A in just a second here. Crypto, did I not? Or, yeah. Here, a day ago. Why crypto is selling off and track this. And in the video, the warning was, I don't know why, but we always seem to get a crypto sell-off on CPI days. So just keep that in mind. And it's so weird because you'd think that if inflation went higher, crypto would go up as well. But no, it just doesn't matter. It doesn't matter what it is. Just CPI day, it's bad. It's very interesting. Very, very interesting. So Cardano under $1 would be very juicy. Very nice opportunity. Crypto reacted late to CPI like bonds did. Yeah, but just hours later. It's so weird. Very, very weird. Maybe everybody was still sleeping or something from the weekend. But anyway, let's go to Bloomberg.com and see what else is going up. And then we'll look at the sticks here. Okay, Elon Musk talks about not wanting to be CEO, whatever. Stocks, bonds fall as inflation debate intensifies. Yeah, let's take a look at this. This is what we want to look at. We'll include this as our bear flag imminent. Oh, great. Stocks retreated. Yields climbed for a third day after the Treasury Department sold $24 billion in bonds at higher levels. At levels higher than just before its bidding deadline. The benchmark S&P 500 fell for the first time in 3 trading sessions, with JPM and Goldman Sachs reporting mixed results. That's true. I mean, it wasn't all up for them, but they were pretty good in general. Tech hung in because low rates fell pre-auction. I'm sorry. Tech hung in because long rates fell pre-auction. And now the whole yield curve is seeing a rise in rates. Tech is being sold, and it was the only thing keeping the indices up. Interesting. CPI jumped. Okay, we got that. Extreme valuations. All right, so let's just talk about valuations and kind of what happened. We'll kind of see what happened. A disaster. A disaster of a day. It's one of those days you need support. And there happens to be a mental health support group that is not licensed to cure you and always says, don't sue me, bro. In the link down below, and you can get 40% off by joining that support group. All right, let's see the pain. Okay, so we ended the day with DD up 11.34%. Build-A-Bear coming back after that sell-off yesterday, back to about 17.13. TTCF up 3%. CBO volatility up almost 5% today. Then we've got Salesforce, Alphabet, Activision, Dropbox. These guys are the ones that are barely up. I mean, good for them. But otherwise, everything. Newegg, Ashford, Affirm, ChargePoint, Quantum, Psy, Hut 8, Upstart, Virgin Galactic. These guys all getting smashed. 7+% to the downside. Voyager Digital down another 6%. Honest Company down 6%. Skills 5.48. Nikola 4.92. GameStop down at 487, down to 180 right now. Lemonade well back under $100. Yeah, wow. This is a lot of red today. Lots and lots of red, Charlie. Charlie bit my finger. Who remembers that one? I don't know why, but our kids love that. So look at this ride. This is crazy. This support line here on Tesla. This is something else. So we have not touched this support line in a very, very long period of time. And take a peek at this. We bounce off 666. We bounce off 666. We bounce off 666. We break through 666 only to come back. And now we're sitting at 666. This line, my friends, is getting boosted. That's a pretty solid bounce right there off that line. Not a surprise. The technical analysis is working. Unfortunately, it's just telling us how low everything's going to go. I'm going to 31,000. We'll see. It'll be interesting to see if we end up falling below the July 8th period. Yeah, no, it doesn't look good on Tesla. It's not good. Tesla just, yeah, I mean, look at this. That bounce right there. It's incredible. All right, let me listen into CNBC for a moment.
That's pretty clear. Morgan Stanley is actually up today, so along those lines, people thinking that those are the businesses you'd prefer. I mean, what is fascinating is, look, Goldman Sachs puts up a 20% plus return on equity for the quarter, right? 23%, was that correct? Or thereabouts?
Yep.
It is.
Now, he says, we've said mid-teens, high teens is going to be where we settle out. So that's the big question for an investor. You have, price to book values pretty much at a post-financial crisis high, as they probably should be because returns are at a high. But where does it settle out?
Okay, we're going to pull off the banks here. Let's listen to Bloomberg.
Notable that financials underperformed on the day when yields went higher. That's always meant to be better for their business model. But it was a day more when we looked at, is it as good as it gets? Are we at peak inflation, peak growth? And are we never as good as it
Carol,
gets?
before you
Remain
go,
always gets better.
No, I don't. Carol, just real quickly, I'm told you got a big interview coming up a little bit later this afternoon.
We do. John Rogers of Ariel Investments, and we're going to talk to him about the market environment, see what he thinks, talk
That's
about
not John
banks
Rogers.
as well. We've got Brian Moynihan also coming up, the CEO, Brian Moynihan, the CEO of Bank of America. That'll be coming up tomorrow.
There he is.
And then we've got John Rogers. So we'll talk about the market environment and then also how to reduce the wealth gap that we have in our society. All right, guys, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We're going to see you again, same time, same place.
Yeah, I see your chat here. Thanks for the $4.99. Been trying to join the channel as a member. It's enabled here, so if you're trying to do it on iPad or iPhone, you won't see it. So make sure you do it from a desktop browser or get off Apple to do it. For some reason, they hide the join button on those. I think it's because they want their 30% cut from YouTube.
They don't have to answer a question from you that says, what's the direction of loan growth? Or why was loan growth disappointing? They've insulated themselves from that conversation. And I think that's incredibly important when you're investing in the financials, given where we are right now, where we're somewhat suspicious where overall economic growth is going to be 12 months from now. You are insulated from that question. Your business is diversified. Even if you see a slowdown in trading revenue, you're gathering market share in the asset management business. Clearly, there's been a consolidation. It's an economy of scale, and both Morgan Stanley and Goldman Sachs are winning in that environment. So I think they're clearly distancing themselves from the other large money center banks.
Catherine, do you view today as an opportunity to buy? Do you think there's more room for this trade to run, which has worked well so far this year?
I will tell you, Sarah, I am mixed. Initially, sort of a week ago, when the good news came out about CCAR, I said, but buy the rumor, sell the news. So I'm not surprised that the stocks were weak today. But looking at JP Morgan's results, looking at Goldman Sachs results, they were really quite strong. And if JP Morgan has an 18% ROE trading at 1.8 price to book thereabouts.
Okay, I'm Goldman Sachs flip on over here and
slitting their own throats. The question I had was, what carrots are they dangling in front of them, or what sticks are they threatening them with?
All right, let's go back to the sticks. The news is being boring right now. Yeah, okay, so going to the sticks upside, we've seen this here. Let's look at after hours, see what's moving in the afters. QSI coming back up, Hive, Ashford. So a lot of the ones that sold off today coming back slightly, not much. It was a pretty big sell-off day for a whole variety of stocks. As the indices barely move, but individual stocks can move a lot. Yeah, after hours isn't so bad. Pretty benign in the after hours here. Yeah. But wow, what a day. Prices just aren't low enough yet for me to try to go in and say, oh yeah, for sure, I'm buying the dip on things. We'll keep an eye on these with certainty. I'm still a little bit more excited about selling puts. I think we're going to get some free credits there, but could be wrong. We'll see. Also a little bit of a hedge there, I suppose, against. Look, if you think inflation's coming and big inflation's coming and it's going to crash some of these stocks, think about it. Sell puts. Sell puts. I mean, you could also buy puts, but you sell puts, take the big fat credit, and because the market's pricing that in, right? Take the big credits on companies that you like, and the more you see the market red, the more you could do that. Now, if you think the market's going to stay down longer term, then obviously you don't want to sell puts. You would want to buy puts in that case. So it kind of depends on your strategy. How long do you think it stays down, depending on the expirations you get as well. So if you get assigned, then you're stuck doing like selling calls and that. But yeah, I mean, it's not the kind of market that for me I would buy puts. I'm happy to sell to take credits because I want to own some of these stocks at lower prices. And if I get them at lower prices because I sold puts, hey, I get paid to do that. If I get them at lower prices because prices fell and I bought the dip, that works too. But yeah, long run, really, I've not even remotely considered buying call options right now. Now, if prices fell a lot, I'd buy calls again. But I'm not even close to that. Like Tesla would have to go back to like, I don't know, for me to buy calls on Tesla because I have so much Tesla, probably have to be like 525. And then I go shopping for Tesla, buying calls again. So it'd be interesting. We'll see. All right. Let's see here. Okay. Nothing wrong with buying the dip at a bit of time. This is also true. Dollar cost average in. Absolutely possible. $10. Wife just sent a pic of a letter stating my kid's daycare will be increasing prices, currently paying $1,022 per month. Timely for today's CPI. Jeez, no kidding. Sorry to hear that. I don't know about buying more calls. The valuation's a little high right now, so I'm willing to wait a little bit on buying more calls. But usually I do like buying the dips with shares or calls, but not these dips. A little too high. Anyway, if you want more buy-sell triggers, well, at least when I'm buying and selling, check out the programs linked down below. Stock Psychology Money, 40% off coupon code expiring in 9 days. Price will actually be going up. We're ready to raise the price. And folks, thank you. Thank you for being here. Tomorrow's going to be more eventful because we have earnings coming out, more earnings coming out. Today was CPI day. It was bad for pretty much everything. We'll see. I'm just shocked. We've been in this mess now for 5 months. Think about it. 5 months since February 17th-ish. So we're coming up on a 5-month anniversary of just crappy stocks. It's nuts. It's been nuts. Oh, well, it's the way it works. All right, folks. Thank you for being here. We'll see you tomorrow. Let's hope for a good, positive green day tomorrow. All right.